Recently, Forbes website published a new article of Mike O'Sullivan speaking about pressure from governments on cryptocurrencies, mostly Bitcoin. Things are stirring in the cryptocurrency world. There's a robust debate about central bank-issued digital currencies, and inside the previous month, Bitcoin has fallen by more than 20%. In its brief life as a trading asset, Bitcoin has shown up to move in sync with equities, so this recent move could spark some concern. A more intriguing, connected query is, no matter whether Bitcoin is definitely an indicator of danger appetite or even a beneficiary of danger aversion. Certainly, within the less independent cryptocurrency community there is a view abroad that Bitcoin and cryptocurrencies are a safe haven in the exact same way men and women might, for instance, regard gold. Bitcoin down more than 20%. My own sense is that cryptocurrencies generally, and Bitcoin especially, will not be safe havens. They have failed the goal they were intended to fulfill, in that they're not actively employed as of indicates of exchange. Couple of retailers accept them, fewer consumers actively use them, and transaction charges are nevertheless really higher. The technology connected with cryptocurrencies can also be complex sufficient to dissuade most households from utilizing them. For many folks, the procedure of establishing a crypto wallet and mentally translating crypto costs into each-day currencies is also demanding to bother with. This ease of use is actually a cognitive barrier to entry and something that will take time for many to overcome, even millennials. Additionally, the infrastructure around cryptocurrencies is fragile in at the very least two respects. Components of the technique, including exchanges, are prone to hacking and ransoming and may also be shut down at the whim of governments. Bitcoin not a secure haven. From the point of view of cryptocurrencies as assets, quite standard information evaluation suggests that optically Bitcoin has a low correlation with protected havens like gold. This does not imply that Bitcoin is really a good diversifier or possibly a secure haven. It has been highly volatile more than the past 2 years and is topic to trading and liquidity risks not usually connected with protected havens. A further clue as for the true nature of cryptocurrencies as investable assets comes in the community of individuals who hold and trade them. The microstructure, or plumbing, of markets, at the same time, because the anthropology and sociology of people who populate them, that will need to be the topic of a future missive, is critical to the way they behave and subsequently to their risk qualities. Within this light, the fact that the biggest holder of Bitcoins is apparently the FBI says a whole lot. A super deal of trading in cryptocurrencies requires place in Asia, other emerging markets like Russia, and in hubs like Zug. Though admittedly not scientific nor thorough, I suspect that many Bitcoin traders also trade equity futures and currencies and make use of the exact same equity trading guidelines, technical, to purchase and sell Bitcoin. Cryptos now have their own rating program, FCAS. If this generalization holds, it suggests that danger budgeting could drive an optimistic correlation between cryptocurrencies and equities, especially at industry highs and lows. Authorities react with digital currencies. On a structural basis, the fall in Bitcoin may possibly also signal trouble inside the cryptocurrency planet, which successfully exists to create indicates of exchange beyond the normal frameworks of governments and central banks. Note that Bitcoin rallied to its year high within the quick aftermath of Facebook's announcement in the Libra project in mid-June. The present disarray surrounding Facebook's Libra project is a sign on the operating and regulatory complexities facing cryptocurrencies. More powerful still is the incentive that central banks and fiscal authorities about the world have for the Bitcoin to not succeed. Witness as an example the vigor with which the Chinese, who tightly control income flows, have clamped down on cryptocurrency exchanges. The next actions within the crypto or digital currency, they are almost exactly the same in that cryptocurrencies are digital currencies that use cryptography, industry for central banks to concern their own coins and for the digital payments market. More thorough regulation, cleaner cross-border payment processes and more trustworthy identification mechanisms will probably be a part of the workload of central banks and governments.